There's about Lipa Mali and Sasa, the December 2021 question 4B. Now we prepare the adjusted taxable income to come to adjusted taxable income of how much? Lipa and Mali are a partnership trading as Lima Enterprises, where they share profits and losses in the rate of 3:1 respectively. On 1st April, South admitted with 1/3 of the profit without altering the existing profit and loss sharing ratio of Lipa and Mali, selling Jana 1 out of the 3. No problem. The following income statement for the year 2020 was provided by the partnership. Now, tuko na biashara mbili, na kama tuko na biashara mbili, just the same way we separated when doing the adjusted taxable income. Even in the allocation, we have to separate it. So you have the first. Is it the first from 3 months? The first 3 months. Na kwa hizo miezi tatu za kwanza tuko na Lipa na tuko na Mali. Then you have the total. Then you have the next 9 months. For the next 9 months, you have Lipa, we have Mali, we have Sasa, and we have the total. So these ones, are they in thousands or just in shillings? So shillings. In anything, we always start with what? Tunaanza na kulipa salary. Tunaanza na kulipa salary. Do you have salary to the partners? The total salary to partners is 428,000, right? The income statement, gross profit for now, with salaries and wages, salary to staff, salaries to partners, 428,000. Any information about this, the additional information? Hi, Miriam. There is no information about the salaries, the additional information clear. So your portion accordingly. So the salaries, the total of salaries to partners was 428. 428,000 for 3 months is how much? Good. That's my for 3 months, 107. 107,000. 107,000. And for the 9 months, the difference. Between 1,000. I'm just trying to check in the additional information if there is any information about the salaries. And if there is none, we distribute as per their profit and loss sharing ratio. Now, before admission of Sasa, they were sharing profits and losses in the rate of 3:1. So Lipa gets 2, Mali gets 1. Right? After that, Sasa came in and also and got 1 out of the 3 without altering the profit and loss sharing ratio. So meaning, huyu aliendelea kupata 2, huyu akapata 1, na huyu akapata nini? Akapata 1 out of the 3. So you have 3:1 is 1. Hawa ni 3. Na total hapa ikakuwa ngapi sasa? 4. That's the English in the question. English in the question. On 1st April, Sasa was admitted with 1/3 of the profit without altering the existing profit sharing ratio. So profit sharing ratio ya lipa ilibaki 2, ya mali ikabaki 1, na huyu akakuja na 1 out of the 3. Sawa. So therefore, can you apportion the salary? 107 times 2 over 3. Finishing the last question we did, the location page. Then November 2021, question 4B. Leta salary ya lipa ya kwanza ni ngapi? 107,000 2 over 3. What? 300. 333. The difference. Three five 667. This other side 321,000. You can do divide by 4. How much times 2 over 4? Only price how much? 160. 500. So if you divide by 2, 80,250 and 80,250. So have salaries, we have interest on capital. Interest on capital. Interest on capital in note number 2 was prorated and shared according to the profits and loss sharing ratio. So interest on capital for the 2. The total for the year was 150,000. 150,000 for the 3 months. How much? So that's 7,500. You can divide by 3. Ama ufanye times 2 over 3 ni sawa. 25K. Na hiyo difference. 25. Ile ya huko ni ngapi? 150,000 times 9 over 12. 112, 500. Divide by 4. Just divide by 4. 28, 500. 28, 125. So 28, 125, you get 11. Then you can multiply by 2. 56 to 50. Sijui kama tuko na kingine. Do you have the commission? Bonus? Sioni popote. Interest on drawings, I can't see any there. There's no commission, there's no bonus, there's no interest on drawings. So at that point, current account does not appear the allocation schedule. Allocation schedule does not appear kwa December. Na vile tulisema ndio vile iko. Interest on capital, interest on drawings, commission, bonus, salaries to partners. Hizo peke yake. Anything else? Hapana. So at that point, we need to have the share of profit. Alafu tuko na business income. Business income. So our business income from our workings. From our total adjusted useless income for the 3 months. How much? 439 in 3 months. 439,062. And for the 9 months, 1360,088. Now, out of the 439,062, we are paying salaries of 107. We are paying interest on capital of 37,500. How much is remaining to be shared as profit? So this is what we are making from our business. We pay the salaries of 107, we pay the interest on capital of 37,500, balancing figure. How much? 294,562. Alafu ukishaiweka mimi kwa current hivi, ukishapata hapo hesabu, jaribu kuadd uone kama inafika hapo. The total should be this. So this one should be the balancing figure, either as a negative or as a positive. Negative ingekuwa share of loss. Positive is a share of profits. It's balancing, right? And how are they sharing the profits and losses? 2:1. So can you share for Lipa? So 294,562 times 2 over 3. Gives us 196,375. You can divide by 2. But area 1. Which gives us 98, 197, 187. So we shall get the total for Lipa, the total for Mali. Balancing figure the other side. Out of 1360,088, we pay salaries of 321. We pay interest on capital of 112,500. We remain how much to share as profit? 926,588. 926,588. Yes. You can divide by 4. So this is 1 over 4. 1 over 4. So divide that figure by 4. How much? 231,647. So if you only 231,647 times 2. 463. 294. Kama approach yetu na kunyorosha to the long cut. So ile answer uko nayo times 2 over 4. Ndio. Alafu ile 1 times 1 over 4. So get the total for Lipa, get the total for Mali, get the total for Sasa. Then after all that, we now bring in what? Other incomes. We bring in other incomes. We bring in other incomes. Let's see if there's any other income to be in. Where will happen? When I look at the information provided, I don't see any other income. So other income is not there. And now we have our total taxable income. So we have for Lipa, we have Mali for the 3 months, and we have Lipa, Mali, and Sasa for the 9 months. Great. So finish it up, the mathematics bit. Then tunaangalia Mary and Khadija in the pilot paper, still date 2021. Pilot paper. Question 3B. The insurance. Now, being told about the insurance, let's just go there a little bit. Tuangalie note number 1. Nipa nauliza swali hapo. Kwa tuambiwa insurance represents Mr. Mali's life insurance policy for his family. So Mr. Mali's life insurance policy, first of all, in the allocation schedule, hakuna mahali kusema insurance inapia. We had the 4 items for the allocation schedule: salaries, interest on capital, interest on profits, commission, and bonus. Insurance unalipiwa na partnership. So the only way it will appear in your computation is when now you're preparing your taxable income as an individual. Hapo mahali utapata something called insurance relief. Now you as an individual. So baada ya kupata taxable income ya mali, tuko nayo hapa. If you are asked to get the tax liability of mali, just for the insurance ingekuja. Because tungechukua income ya 3 months plus income ya 9 months. Tuweke pamoja, you can play the tax using a graduated scale rate. Compare the personal relief because an individual is a resident, alafu pia tumpe insurance relief. But sasa hiyo ni a baby class. At our level, they don't want that. They always assume, I don't know if it's an assumption or it's true, that you know how to do that. It's an assumption or it's a fact. Tuachie hapo. Haya, sawa. So Mary and Khadija, the pilot paper of date 2021, 3 boy. Now Mary and Khadija are in a partnership trading as Mahadi Enterprises. They share profits and losses in the ratio of 3:2 for Mary and Khadija respectively. So Mary anapata 3, Khadija anapata 2. Page 27. Page 27. The partners presented the following statement of profit and loss of the partnership for the year ended at 1st December 2020. Tuko na sales ni za biashara. Ndio. Sales ni za biashara. Clothing stocks pia ni ya biashara. Rental income. Sio ni other incomes. Other incomes toke kwa biashara. Ndio. Other income toke kwa biashara. First things first, we only need to deal with the useless income. Any other income that does not belong to the business will appear under other incomes. And we've seen where it goes in the allocation schedule. For the sake of partnership, dividends received, the same scenario. Tutoe kwa biashara, tupeleke kwa other incomes. Foreign exchange gain. Taxable, not taxable? Taxable if realized. Taxable if realized. If the examiner is silent, you have the power is in your hands. Make an assumption that makes your life easier. Interest income. Itoke kwa biashara. That is an investment income. So remove it from the business discount receipt for the business. That's a business income. Now the expenses, opening stock purchases, those are biashara. Salaries and wages, are they allowable, disallowable? Allowable. Insurance, allowable. Traveling expenses, allowable, disallowable? Are they expenses for the business? Are they expenses that we must incur for the business to operate? The business we must move around. So ni biashara ambayo ni allowable. Salaries and wages to Mary and Khadija, allowable, disallowable? That one becomes disallowable. there should be no transaction between the partnership and the partners. So disallowable. Rent rates. So ziko sawa. Hizi rates za lazima tulipe rent. Ndio, lazima tulipe rent. Ingawaje in taxation for that word rates kwa inaleta ka question mark. Because rates are taxes. Ndio, rates are taxes. And because rates are taxes, we always tend to disallow anything called, because a taxable income should not be affected by what? Tax. We know that naturally rates are taxes. So we are at liberty to disallow it. But now the big name called rent. That's the challenge. Next time what is rent and rates. If it's rent and rates, because of how strong the word rent is, you cannot disallow rent as an expense. Because that is one of the key expenses of any business. But sasa hapa tutadisallow kwa sababu amesema nini? Rent rates. Revenue rates are rent. So you can disallow from the perspective of it being a tax. That's how. But I repeat, ukipata rent and rates, you should not disallow because of the powerful of the word rent. So if there's a way you can remove the rates, then disallow the rates. So because rates are what? Taxes. Taxable income should never be affected by tax. Interest expense, allowable, disallowable? Allowable unless come up with the interest or capital, right? Goodwill written off. Allowable, disallowable? Goodwill is a fixed asset. Writing off is like amortization. Become a depreciation of goodwill. Do you know? We don't. We don't. Because, by the way, depreciation, amortization, disallowable. As far as fixed assets are concerned, what we know is what? Capital allowances. So, members give goodwill written off, give it to guys, it is allowable. Medical expenses for partners? Allowable, disallowable? Disallowable. Legal expenses? Allowable, disallowable? Can say subject to confirmation. Subject to confirmation. What of bank charges? Lazima tuzilipe kama biashara, si ndio? So those are allowable. Stamp duty. Allowable, disallowable? Allowable pia stamp duty independent. It relates to what? It can be the stamp duty on preparation of a lease agreement of up to 99 years. Sitakuwa allowable. Because if the stamp duty relates to allowable item, then it will also be allowable. If it relates to a disallowable item, it will also be what? Disallowable. So you try checking in the question, what is the transaction that could have attracted stamp duty from the information provided, so that you allocate it somewhere. You allocate the stamp duty somewhere. So tutaangalia loss on sale of equipment. Allowable, disallowable? We are not in the business of buying and selling equipment here. So disallowable. Depreciation now. VAT paid. We cannot allow tax here. So disallowable. Purchase of furniture. Disallowable. Huyu accountant alileta mchezo, ananunua furniture na kwa income statement. Hiyo ni kulipia serikali. Disallowable. Depreciation nayo disallowable. And they got a net loss of 11,13,814. On 1st April 2020, Apple was admitted as a partner. So that statement confirms that kuna biashara mbili. Lazima to account for it as two businesses. So Apple was admitted as a partner. He contributed 960,000 as her share on capital and goodwill. The profits and loss sharing ratio revised to 2:1 for Mary, Khadija, and Abby respectively from 1st April 2020. Abby was not entitled to a salary for the year 2020. Interest expenses comprised interest on capital. Ya Mary, Khadija, na Abby's ni disallowable. Interest on loan. Interest on loan is allowable still. What about fringe benefit tax? Hata jina hapo tax inaiorosha, ndio. By the way, what is the fringe benefit tax? Tax on, sometimes unakuja unasema tu it's a tax on fringe benefit. Ndio tuanze kujiuliza fringe benefit ni nini? And the rates for the company, the rates for the market still. Now, we have something called interest benefit. And in employment income, we have something called interest benefit. Interest benefit is where the employer gives you a loan at a discounted interest rate. Unapata ukienda kwa market, unapata hiyo loan na interest at 20%, for instance. But employer anapea employee loan na interest at 10%. So the benefit is what you are saving. If you have gone for this loan on the market, you have paid 20%, but the employer is giving you at 10%. So that difference of 10%, that is the benefit you're talking about. That's how. And it is called fringe benefit or low interest benefit, depending on the timings of the loan. If the loan was granted any time from 12th June 1998, then it's called fringe benefit. And that benefit is taxed on the employer. Sasa, kama ni loan ilipeanwa before 12th June 1998, then it's called the low interest benefit. It used to be taxed on the employee. So currently, when my employer gives me a loan at an interest rate that is below the market rate, then the benefit I'm getting from that loan is called the fringe benefit, and it should be taxed to the employer. And kwa sababu hapa huyu employer alilipia tax, the fringe benefit tax. Sasa, but anyway, hata kama tungekuwa tunatujui maana ya fringe benefit, so kuna hapo jina tax that God blesses us with, that is allowed. All transactions relating to equipment and furniture occurred after 1st April 2020. All other revenues and expenses accrued evenly throughout the year. So all transactions on furniture and equipment ilifanyika baada ya abi kuingia. Zingine zote za mwaka mzima. Determine the adjusted profit or loss of the partnership for the year 2020. Great. Now allocate the profits or loss computed in P1 above to the partners. So tuko na Abi, tuko Mary, Hadija and Abi. Mary, Hadija and Abi. Mary, Hadija and Abi, 2020. Can call it adjusted taxable income computation. So adjusted taxable income computation. So tuko na 3 months before Abi aingie, aliingia 1st April. So tuko na miezi 3 za kwanza, alafu tuko na nini? 9 months. So you have 3 months and you have 9 months. So do we have the reported net loss? The net loss that was reported 11,3840 times 3/12. 11,3840 3/12. 70. 278. 278,460. You can do times 9/3. You can solve times 9/3. Kama inapiga chenga kweli tatu ya 9 months. Forget. Eight, 3, 5. 3, 380. 835, 380. Yeah, they are negative, sorry. Both are negative, thank you. Then we add back what? We add back the disallowable expenses. We add back the disallowable expenses. So start with additional information. On 1st April, Abby was admitted. She contributed 916 cash as her share of profit, as her share of capital and goodwill. Profit ikabadilika. I think that one is already affected. We look at number 2. Interest expense comprised. Can we add back interest on capital? Interest on capital. Tukona Mary. Mary for the 3 months. 432,000 divided by 108. So 108,000. The difference times 9/12 times 9/3. 324. We also have Khadija. Khadija for the 3 months for 83/12. 120. So 120, the difference 360. So 360,000. Abinai for 3 months. Young Grayson and Evans of 3/12. She was not there for the 3 months, right? When you have 9 months, 9 up one happy. Your portion. The whole figure and when she was around. Yeah, when she was around. Can we add back fringe benefit tax? For the 3 months to 43/12, 60. So 260. Difference in what? 180. Right? Then all transactions on equipment and furniture, we shall follow the instructions. All other revenues and expenses accrued evenly. So additional information, I think it is sorted. The pale juu kwa expenses zetu kwanza. So opening stock hatuna shida nayo. Sindio? Purchases hatuna shida nayo. Salaries and wages hatuna shida nazo. Insurance hatuna shida. Traveling expenses no problem. Can we add back salaries to partners? So salary to partners, Mary, 3 months ni ngapi? 723/12. 180. The difference 540. 540. Hadija 9. For 80, 120. So 120 and 360. Can we add back rent rates because of the rates? So rent rates for 3 months. 580, 558 times 3 over 12. 1395. And the difference? So 418,500. Interest expense, we've already taken care of it. The additional information. Goodwill return of added back. So goodwill return of 3 months. 30. 30K and 90K. Medical expenses for partners, can we add back? So medical expenses for partners. 3 months. To 4480 over 12. 60. So 6120, the difference. 19. 180, 360. Legal expenses, there's no information about it. So examiner is silent, what will do? So you write the legal expenses, you assume allowable or disallowable. An assumption that makes our life easier. The one that makes our life easier is what? Allowable. So that you add back what? Dash. Because that you are, by the way, when we write it, because we know there are some legal expenses that are allowable and there are some that are disallowable. So before question 1, before topmost page, when we say like any assumption made must be precisely and concisely stated. So with our own conscience, we are stating it. Don't comment on concisely na manishana. Hi, bank charges is okay. Bank charges iko sawa. Stamp duty. Stamp duty inaweza relate kwa nini sasa? Can you relate to the sale of equipment? So you're selling equipment, you must pay the stamp duty. They can relate to sale of equipment. Transfer of properties here. Sina track the stamp duty. Yeah. Ama kuna property ingine tulibuy. There. Actually, the essence of the stamp duty is to legalize the transactions. Legalize the transactions. Sioni hapo ndani. Anyway, the examiner is silent on it also. You don't need to punish your head so much. Make an assumption that makes your life easier. That's how. So stamp duty. So that if it's not making sense, you can simply say allowable, disallowable. Because the examiner got silent. It's not telling us it relates to what. That's how. Can you assume allowable? Can I assume allowable to make our life easier? So that we add back the dash. Loss on sale of equipment. Disallowable, right? How much for 3 months? hapo unanyoroshwa. Soma note number 3. Note number 3. Aliyeka deliberately, ndio. So that mtu kama wewe usipate marks zote kwa hiyo swali. I hope you are all seeing that one, right? Do you have VAT? So all transactions relating to equipment and furniture was after 1st April. So VAT, how much for 3 months? That's 9,123 over 12? 87. 97. 97.80. The difference? 29. 3/4. Purchase of furniture. How much for the 3 months? 3 months is dash. Then this one 57,600. What of the depreciation? So depreciation for 3 months, 48,003 over 12. 12K. And the difference? 36K. So we've taken care of our expenses. So we shall have the figure to add back. Now let's put the incomes. We see what you're supposed to less. Let's go to the incomes, is what you're supposed to less. So we less sales iko sawa, closing stock iko sawa, and we less the rental income. Total incomes zote ambazo si za biashara. All non-business incomes should be taken out of the business. One of the non-business incomes I consider is rental income. So rental income 522 for 18. How much? 135,500. So 135,500, the difference? 120, 130? 620. And the difference? 391 to 60. 860. Next we have dividends. Here to the less. Yeah. So less the dividends. So 54 to 43 over 12. Yeah. Getting 13,560. Kindly less 13,560. And for the 9 months, 4680. So 4680. Hope you are all following. Kwenye kana kuerosha unasema. Haya. Foreign exchange gain. Examiner is silent again. Ndio. Make an assumption that makes your life easier. You are realized or unrealized? Because you realize are taxable or you don't less. But you must write. You must write. Because the examiner wants to see what you've assumed. So right there, foreign exchange gain, unaweka kwa brackets realize, then you put dash dash. Realized. When you assume unrealized, then you have to remove it. Because it would mean it is a non-taxable income. That you to your income statement. But if you assume it is realized, then it means it's at the right place. So don't remove it. Because it would be a taxable income.
So bracket you put unrealized.
Realized. By the way, in an exam, let me say this. You can decide to put either, as long as you account for it correctly. Because remember, foreign exchange gain that is realized is a taxable income, right? And what you're writing, we are removing the mistakes in this income statement, right? So if you say it is realized, then it means it is not a mistake for it to be there. Still, that's why we don't less it. Because it would be a taxable business income. So, like in case you unrealized, then it means it's not supposed to be there. And how do you remove an income? By deducting. So it all depends on the make assumption. Gary, like in answer to adopt policy that we don't want to punish ourselves. We make assumptions that make our life easy. So, but if you want to make your life hard, it's also a good assumption and you'll get the marks. As long as you don't make your life hard, I'll have to adjust here. Beginning. Sasa. Okay, it's clear. Great. Hard. Tumefika kwa interest income. Spring oil. It's an investment income still. So interest income, can you put that one down? The total is 120,000. 120,000, 3 over 12 is 30. So 30,000 for 3 months and 90,000 for 9 months. Discount received. Yes, iko sawa. Hiyo ni taxable income ya biashara, iko at the right place. Then we less the capital allowance. Capital allowance ya furniture. Capital allowance. I can see furniture. Furniture pale kwa leakage rate yake ni ngapi? I think 10%. Leakage iko tu pale before question 1. Before question 1. 10%. Yeah. So 10%. Cost of furniture was how much? 57,600. Lakini biashara ilikuwa for how long? Biashara ilikuwa for 9 months. Before question 1. Now let me explain myself a little bit here, kindly, just 1 minute. Capital allowance hazinanga kwa portion. Sasa hazinanga kwa portion as long as the business was there for the whole year. When the business was there from January to December, whether I bought this furniture in December or I bought it in January, I'll claim capital allowance for the whole year. But I'll only apportion capital allowance if the business was not there for the whole year. That's how. Like the furniture, furniture were acquired after 1st April. So meaning, they were acquired for the new business. So they don't relate to the business that was there for the 3 months. And that's why you have to apportion the capital allowance relating to it. That's how. Lakini wangesema furniture was acquired on 1st March. Sasa biashara ya kwanza ingeenjoy. Na tunge abortion by the way. Because tungekuwa nayo before to change the business. So tungechukua our 10% of 57,600 times 3/12 to pay yake times 9/12 to pay hii yake. Because it was there for for both businesses. So if I repeat, you only apportion capital allowance if the business never operated for the 1 year. It's not about assets acquired when, but is the business existed for how long? Right together? Yes. And not only for furniture capital allowances, zote by the way, kuanzia 2020. Kama biashara haikuwa kwa mwaka mzima, kuna portion. Lakini kama biashara ilikuwa kuanzia Januari mpaka Disemba, whether tulitumia kwa miaka miwili, kwa miezi miwili, ama tulitumia kwa miezi 12 ama miezi 5, you claim for the whole year. That's why it's called on reducing balance. Sasa, that's why it's called on reducing balance. Sasa tumalize. Na utaileta huko. Si huko mbele peke yake. I don't know how much it is. Sorry?
How do you explain
When the new partner joins, circumstances under which the partnership is dissolved, when one of them is provided their skill, when a new partner joins, so wanna come up the new partnership deed. Yeah. When one partner retires, when a new partner joins, when one partner dies, so the court order, all those. Sorry. Kwa sawa. Haya. So hii umesema ni ngapi? 320. 320. Great. So get the figures to memorize. Get the figures to add back. Get the figures to less. So that we have our adjusted business income. Let me write it here. Adjusted business income. Interest on loan, which is already part of the income statement. It's among the expenses. Just the same way, salaries to staff, tumeiacha ndani, sio? Bank charges. Commission. Salary. We have salaries and wages. Mary and Khadija. Happy did not enjoy the salary. Definitely, Ami was there. So it's gonna make online for 3 months is how much?
180.
Mary. So Mary is 180, and for the 3 months, 540. That is Mary, right? In Khadija, for 80,000 times 3/12, 120. So 120K for 3 months, and for the 9 months for Khadija, 360. Abby got nothing. The total salaries for the 3 months. Mary and Khadija, 300K. And for the 9 months, 900? 900, right? 900,000. Angalia salaries to partners. You're seeing Mary? Mary is 720. You're 720 near 12 months. So nataka Mary at 3 months tuweke hapa. And Mary at 9 months tuweke hapa. So this time round tulikuwa for each partner. Sasa ile tulifanya saa zile kwa tumekuwa the total salaries. So you are portioned based on the profits and loss sharing ratio. Sasa do you have the interest on capital?
Yes.
Number 2, still. So you have
Yes.
interest on capital. Kona Mary, kona Hadija, kona Abby.
20.
Total interest is 432,000 for 3 months is how much? 108,000. And for the 9 months?
24.
384.
24.
284. 324. Sorry. So you have 324. Thank you. Hadija for 80,000, 3 over 12. So you have 120 and 360. What of Abby? 48 for 9 months still.
Yes.
So can you get the totals?
228.
228. And for the 9 months? Second, sir.
732.
732,000. Any commission, any bonus, any interest on drawings? Kumbuka zile hatubadilishi, vile tuliziandika ndio vile ziko. Kama iko weka, kama hakuna then hakuna. There is no commission, there is no bonus, there is no interest on drawings. So don't look for anything else. That's all. So can we share the profit or loss? Share of profit. Then you have the business income. So from the business, we made how much for the 3 months? 386,760. And for the 9 months? 1280. 760. The adjusted business income here. So out of the 386,760, we are paying salary of 300, interest on capital of 228,000. How much remains? I'm seeing a negative. 141, 240. 141, 240, right? It's coming from the car. How are they sharing profits and losses? 3:2. So Mary gets 3, Hadija gets 2. Total only 5 still. So whatever the 141 to 40 times 3 over 5. 8. Oh, for Mary 84. 744. It's a negative. And the difference? 56 for 96. Hi. Balancing figure kwa kwingine. Sawa. Kwenye kunyorosha nauliza. Hata kama swali nisijapata hiyo. Reading to what? Reading to what? To 40. No matter. Sawa. Tunakashia profits aje? 2 to 1. So 2 is to 2 is to 1. Total bado ni 5 still. But then the 351 to 40 you can divide by 5. When you divide by 5 utapata ya Abi. Then you answer na multiply by 2. Utapata ya Mary na Hadija. So ya Abi ni ngapi?
70. 70.
248. You multiply by 2. 140. 496. So 140, 496. 140, 496. So you get the total for Mary, total for Hadija, total for Mary, Hadija, and Ali. So Mary for 3 months. For 3. 256. And Hadija 183. 504. And by the way, 504, thank you. And by the way, when you do this plus this, you should get this. So hiyo ni ile time unataka kuprove kama answer yako iko correct.
Good.
9 months, Mary. 723. 504. Hadija 579. 504. Finally, Abi, a negative of 3. 248. 248. So we bring in other incomes. Kindly be very careful, other incomes. Check where other incomes are coming for the partnership. Zinakuja kwa allocation schedule. Kwa kampuni ama biashara nyingine ya kawaida zilikuja hapa chini. After the business income, tukaleta other incomes. But for the partnership, you don't overburden the business. After all, given the profit from the business should be given to the partners. So other incomes yapeleka wapi? For partners. Sasa, to distribute the partners. Now for other incomes, sasa ndo kuna mambo sijui ile mambo mbaya, mambo yote. Zile other incomes ambazo tulizingoa hapa, sio tulizingoa kwa sababu zote hazitaksiwa. Kuna zile zinataksiwa. But now, rental income, residential but commercial, lakini lazima uiandike. Because the examiner ako silent. Because we know if it is residential, then it must exceed how much for it to be taxed? 15 billion. Lazima ikiwa exceed 15 million, will go subjected to tax. Otherwise, 10% withholding tax is final. In our case, rental income hata haijafika mita moja. Sindio? So for other incomes, then the examiner is silent, he's waiting for your assumption. So you said you assume residential. So just put into brackets residential. So that you put what? You put a dash. Evidence. Qualifying or not qualifying. Examiner is silent. You are fortunate. You are fortunate. I just want your dividends from where? So you assume qualifying or non-qualifying, ama exempt. Huh? You assume kinataka. So I can assume it's qualifying. Qualifying means what?
Deducted.
The withholding tax is final. By the way, what are the examples of qualifying dividends? Hiyo swali umekuwa unaomba sana nisiulize.
They're deducted from the source.
I'll start for you. Dividends from SACCO and agree. There are two. Yeah, from post-bank we exempt. And whether from post-bank you don't receive dividends, you get interest. Still, because shares of post-bank, still. Dividends from when it says something. You are checking on the documents, documentary evidence. The qualified dividends should be coming from a company and a SACCO. Simple as that. Dividends from a building corporate and a SACCO. What of non-qualifying? Hiyo ndio ile niliomba tuishike. Sijui kama ombi yangu yalifika. Dividends from a cooperative society other than a SACCO. So the dividends you receive from a non-SACCO cooperative society in the letter R. Because it will be non-qualifying, meaning the withholding tax is not paid. So hii tumesema ni qualifying, kwa hiyo tunaweka dash. Interest. Interest income, qualifying or non-qualifying. But then remember it is a partnership. And we say that the only non-qualifying interest is the interest received by companies. Interest received by companies from financial institutions and government securities. Like in partnerships in individuals. Partnership in individuals. Press and media. Okay. So you can just has an interest. So it's not an interest received by individuals. So we have our total tax salary. Let's keep up and do now. Then you can check what more. Yeah, on partial suffer. There's a question in November 2015.
Income.
3 of November 2015. Kwa nyuma kabisa. Click on was that last page. James and Kata.
Come up again. Come up again. Question 3.
Sorry,
Question 3, December.
question 3 of the November 2015. Is it November or December? November 2015.
Okay.
November 2015, question 3. So James and Qatar. I hope you're all there. Hi. Now, tumeambiwa kuwa James and Katana established a partnership business, sharing profits and losses in the ratio of 3:2, respectively. So James gets 3, Katana gets 2. Clear. The following is the income statement of the partnership for the year 2014. Sales is a biashara. Clear. Unrealized foreign exchange gain, taxable or taxable? Not taxable. Clear. It's unrealized. They have to be realized for them to be taxable. Capital gain on sale of shares, taxable, not taxable. Both answers have the word taxable. So is it taxable or not taxable? But then we are not in the business of buying and selling shares. When we talk about biashara, it's a non-taxable income. That's how. The gain on sale of shares attracts a tax called capital gain tax. And capital gain tax is always it's always charged at 15% kuanzia huu mwaka, which is final tax. So I can say maybe gain on sale of assets. Accountant ataiweka kama income. Proceeds on sale of assets. Accountant anapenda kuziweka kama incomes. Lakini in taxation tunasema hapana. We are not in the business of buying and selling assets. So when we are selling shares, then we are affecting our investments. It should affect the balance sheet, not the income statement. Because when we bought the shares, we didn't put them in the income statement. We put them in the balance sheet, right? When we bought the fixed assets, we didn't put it in the income statement, the proceeds on sale, on the cost of buying that asset. So when we sell that asset, we cannot bring it again in the income statement. That's how. So gain on sale of assets, proceeds on sale of assets, non-taxable. Loss on sale of assets, disallowable. Because kama ni loss, accountant anaekanga kama expense. Sindio? Kama ni gain ama proceeds, anaziekanga kama incomes. So for the incomes, non-taxable. For the expense, disallowable. So so capital gain on sale of shares inakuwa non-taxable. Tutoe hapo. Recovery from insurance on stock stolen. Insurance compensation on stock. Is it for the business? Yes, it is. It's taxable income. Goods transferred to branch at cost. When you're transacting among ourselves, we should not charge any margin. So it's at cost, that one is okay. Dividends from carrying cooperative society. Biashara, that's an investment income, right? So remove it from the business. That is true. Now, by the way, is it qualifying or non-qualifying? It's not qualifying, right? Because there are dividends from a cooperative society that is not a circle. or other incomes kama ni partnership. Ndio. Haya, on the expenses, purchases belong to the business. Purchase of computers, disallowable. Disallowable to pay capital allowance, right? Partner salaries, disallowable. Legal fees, subject to confirmation. Repairs and maintenance, allowable. Rent and rates, because of the word rent. Yeah. So allowable. Interest on loan, is it allowable? Yes, it is allowable. It is allowable unless told otherwise. Interest on loans, your finance cost is genuinely allowable unless kama kuna story ingine ndio additional information ya kufanya to think otherwise. But interest on loan, your finance cost, it is allowable. General expenses, allowable, disallowable. Na pia neighbor si general bad debts. Si general bad debts. Ni general expenses. Kwa hivyo ni allowable. Examiner ni mjinga. Penda kukoroga. Penda kukoroga. So that one is allowable expense unless told otherwise. If they're silent, general expenses ni zile to expenses dogo dogo ambazo hatuwezi jisimamia. Sasa, so we generalize them and we quantify them into one unit called general expenses. Next time they can call it miscellaneous expenses. They are allowable. Motor vehicle expenses. Are they allowable, disallowable? Kumbuka again is not purchase of motor vehicle. So it is allowable still.
Yes.
Still. No. That is a motor vehicle running expense. Repairs and maintenance, fuel for motor vehicles. It is not purchase of motor vehicle, but it's the motor vehicle expense. For the normal expense for the business. Only allowable. Insurance. Insurance is fully allowable. What if it was insurance of motor vehicles? Because nakuanga na jina allowable. Kwanza ukisikia naiba nasema disona maliziana allowable. Class ya mtanu. Na ni Sunday baada ya fatigue ya wiki mzima. So unajipatanga kuacha. What if it was insurance of motor vehicle? It will still be allowable, by the way. Insurance expense is allowable, whether I'm insuring a capital item or a revenue item. Insurance ya motor vehicles inalipwa kila mwaka. So it's an expense paid to generate the revenues for that year. It's not a capital expense. So insurance is fully allowable. The asset belongs to the business. I should not be insuring my private motor vehicle. It's a private expense. Right? So insurance as an expense is fully allowable. Preliminary expenses. Pre is before. So the cost that you incur before the business starts, is it allowable? Which is disallowable still. Then we only have three preliminary expenses that are allowable. Ni tatu peke yake ambazo ziko allowable for preliminary expenses. And the preliminary expenses, number one is about the staff recruitment costs. Lazima recruit staff wako. Staff recruitment cost as a preliminary expense is allowable. Cost of stationery is also allowable, and advertisement. These are tatu, but generally, was to mention anything about the three, itakuwa disallowable. The three costs that are incurred before the business starts operations, which the Act allows it to be allowable. recruiting of the staff. Sababu hata kama it is not important. Lazima ni recruit staff yangu, iko biashara ikianza wakuwe tayari. Si ndio? Lazima ni buy stationery. Na lazima ni advertise. Si ndio? Lazima ni advertise. So those three are the only ones that are allowable. But generally, examiner sema tu preliminary. Just look at it as a disallowable expense. Sasa I'm giving the three because unaweza enda kwa additional information alafu akwambie preliminary expenses included purchase of stationery, staff recruitment, advertising. If there is any among the three, then those three will be allowable. Anything else is allowable. It's capital. The cost of registering a business, that is capital. Preparation of MOA and the partnership deed, that's capital still. You're incurring a cost once that will help you for many years. So it's capital related. Hi, director's fees. Allowable, disallowable. Now there's something we need to appreciate here. You're going through a question on partnership. Do you have partnership? Do you have directors in a partnership? In a partnership, the partners. But then don't forget you're at advanced level. Advanced level still. Now, you're going through a question on partnership, then you see some directors' expenses. How much directors' fees? Something to do with the company should start bringing in. So most likely, the partnership was converted into a company. So she'll start thinking of that. And if his partnership was converted into a company, let's start thinking. Directors' fees haiwezi kuwa kwa partnership. Sindio? Na salaries to partners haiwezi kuwa kwa kampuni. Those two now zinakuwa different. Sindio? So as you continue reading, you start preparing yourself for the conversion. And then, but there's no problem. Conversions ni biashara ingine inaanza. Vile tu admission of a new partner ilikuwa biashara nyingine inaanza. So there's no big deal. Sasa, there's no big deal. So director's fees will be allowable expense for the company. If there is a company, otherwise, watuambie directors ni akina nani. Audit fees, allowable, disallowable? Allowable, sindio? Pia tena depending. Audit fees, a partnership can appoint an auditor. Sindio? It is not illegal. What of debenture interest? Allowable, disallowable? No, naambianga neighbor sema allowable, mimi sema disallowable. It's a finance cost, sindio? But now again, debenture interest cannot be allowed. Why do we issue debentures? The job, by the way, if your finance cost, what do we misinterpret? Finance cost your income statement. Inakwanga interest on loan to finance the operations. Not interest on loan that we took to invest. When first I pay in that loan should always be capitalized. And part of the cost of debt. Right. So the interest on loan, the interest on debentures, I cannot take the debentures to and always take the debentures to invest. I cannot sell the bonds to buy stock. The bonds, the debentures, and always sell them to invest. So the interest on bonds and interest on debentures becomes a disallowable expense. Even interest on loan to allow, which is a loan. That because you here loan is to make financing operations. But come on, it will be a here loan. Additional information the interest on loan related to a loan, maybe to buy a motor vehicle, in the disallowed. That's how. And I think I can give another practical explanation to that. If I want to buy a car, I got the car yard, the cost of the car in the yard is 2.5 million,
Checking.
right? The cost of the car is 2.5 million. Only the mwaka alisema lenda 2.5 million unaenda na hii gari. Then I go to the bank for asset financing. I have some good rapport with the bank finances 100%. But hata kama niko na rapport nzuri nao so kuonyesha they charge some interest. Ndio. So they charge me interest of like 300k. Right? In my books as the owner of the car, what will be the cost of the car? 2.5 or 2.8? 2.8. Ndio. So you get my point. The interest on loan to invest should always form part of the cost of investment, should be capitalized. Sasa. So interest on debentures will be disallowed. And again, can you issue debentures if you are not listed? Because debentures are issued to the public. Sasa ni mambo ya finance. Can you issue debentures if you are not listed? No. You cannot engage the public if you are not listed. And the debentures are issued to the public. We have a partnership that is listed. No. So I hope you are seeing where I'm heading. That it cannot relate to the partnership. It can only relate to the company. Sasa, nilisema tuko advanced level. Traveling expenses. Allowable, disallowable? Allowable. Hata mwogopa kusema sasa. And so I was in low level. Now, additional information. Additional information. So Miriam, Mas, I hope we are together.
Yes, we have.
Okay. So additional information. The partnership was converted into a limited liability company by the name Kaka Limited. I think our suspicion.
Yes.
So it was converted into a limited liability company by the name Kaka Limited on 1st October 2014. Incomes and expenses accrued evenly throughout the year unless otherwise stated. And I believe unless otherwise stated, the company directors face the interest on debentures. So you don't wait for the examiner to state for you your knowledge. Purchases and sales were inclusive of VAT at the rate of 16%. So purchases are overstated or understated. Both answers have the word stated. Over or under? Stated? Over, under? Because by the way, VAT is tax. That December, tax should not affect the taxable income. So our sales are on VAT. So our sales are overstated and our purchases are also overstated by 16%. Hi. Closing stock was valued at 1840,000 when opening stock was at 10% of sales net of VAT. Ingereza imeanza kuleta shida. So you have our closing stock 1840, right? And for opening stock, check out the correct figure for sales. We just take 10% of that. We shall draw VAT for sales, but the correct figure 10% of that will be our opening stock. Clear? English too. Legal fees comprised petition to Association of Manufacturers. Allowable, disallowable? So allowable if tunakaleka English down. Kalitwanga jambo kata. Allowable if successful. If you won the case, then it becomes allowable. If you lost the case, it becomes disallowable. Assumption. Like this one, we are not talking. So you go with that assumption. Then Oh, you got that they didn't win. It's okay. If you got that they didn't win, then it becomes a disallowable expense, right? But remember, you make an assumption that makes your life easier. We'll see. Notice for change of business name. Allowable, disallowable. Change of business names means change of the company, change of the business from partnership to company. Sini capital. Where disallowable. Conveyance phase of business premises. Sini capital bado. Disallowable. Stamp duty. It can only be relating to what? Change of name, business premises transfers nil. Sense capital, right? Where disallowable. Negotiating a business loan. Allowable, disallowable. Kuna class ilikuwa alafu kuna wenye walikuwa nasema it is allowable. It is allowable na disallowable zinakaribiana. Kusema uongo nasema hapana nilisema disallowable. Survival for the details. Anyway, negotiating a business loan is disallowable, right? See, the only thing that relates to loan that is allowable is the interest on loan. So it is allowable. Recovery of bad debts. Recovery of bad debts. That one has to be allowed still. Yes, capital for you. We are settling issues with our customers. We are recovering our bad debts. That is okay for us. So it is signing 100-year lease agreement. It's over 99 years. So partners' private residence is allowable, right? Appeal against tax arrears. Tax appeal is totally disallowable. Disallowable. Then repairs and maintenance comprised purchase of furniture. Disallowable. Give it what? Capital allowance. Allowance. Installation of new sign is allowable. Same scenario, right? Designing an office block. It's still capital. Still. Still. The partitioning the partitions. Still the capital. Designing an office block. So you're designing so that we can construct it. It's capital. Cost of partitioning office block we ask the government. That's what we give.
250.
Business premises. Senior repairs and maintenance. General expenses included registering of patent rights. It's capital. So this allowable. Flotation costs. What are you floating? We just need to check. Did we issue any shares or we issued debentures? Hakuna mahali tuliissue shares. Hakuna mahali tuliissue shares. We issued debentures, right? So inakuwa disallowable. At least associated with the transaction that you see. Otherwise, unless kama hakuna transaction, yenye unaona uweke assumption nyingine ya kawaida. Sasa, but if you have flotation costs, we can issue debentures, we can issue bonds, we can issue shares. Sasa, in our case, hakuna mahali tuliambiwa about issuing of shares, but there's some information about the debentures. So you can associate that flotation cost with the debentures. So equate disallowable. Negotiating costs for an additional piece of land for business expansion. Sini capital. Disallowable. Interest on loan includes interest on partners' capital of 100,000, which was shared according to the profits and loss sharing ratio. So inakuwa disallowed. Lakini yenye iko allowable wametuambia kuna mambo mengine iko hapo ndani mbaya. Hapo ndani kuna partners interest on partners capital. Kwa hivyo hiyo tunabaki ngoja. Ile inabaki ndio inakuwa allowable. Then for 14 marks, wow. A statement of adjusted taxable profit or loss for the business for the year ended 31st December 2014. I think the hit. But in taxation, even at the right time, in taxation, when you see anywhere written hint, then please comply. Hint wamesema tuanze na
Gross profit.
wamesema tuanze na gross profit, usiende vile tulianza hii. Hii tulianza na nini? Tulianza na net profit. And that word hint is not that they're giving you an option. They're giving you instructions. Sasa instructions wamesema uanze na gross profit. Trust me, ukianza na net profit, they don't even mark. They don't even mark. You get 0 out of 14 because you didn't follow the instructions. Sasa it is not an alternative. It's an instruction given. Sasa so kama hakuna hint, then examiner amekupea uhuru, unatumia approach unataka. Ukishasema hint, comply. Comply. Wanasemanga very polite hint. Now, as you think about the hint, are you going to add back the disallowable expenses? We'll be messing when we add back. I don't know if you're saying that. But now, yes, we're now preparing the correct income statement. Right? So as you have a gross profit. For gross profit, you don't add back the disallowable expenses, but you less the allowable expenses. So zile tuliziacha kwa hii swali tumefanya, lazima tunadili nazo sasa. So let's see how to deal with it. So as a working, tafuta gross profit. So I have some workings. So that we get the gross profit. Tumesema tuanze na gross profit. So let's look for the gross profit to start with. Need to make our life easier. Alternatively, tungeanza na sales. Lakini tukianza na sales, kuna vile inakoroganga wanafunzi. So let's go for an alternative that makes our life easier. We have the sales. Now the sales. Do we need to remove the 16% or we need to get the 100%? We need the correct figure for sales. We are not adjusting anything. We are preparing the correct income statement. There. So we need the 100%. Right? Now natuambia kwa sales and purchases are inclusive of VAT. Sales zetu pale juu ni ngapi? 67.28. So can I do 67.28 times 100 over 116? No, I don't do 16 over 116. I don't need the VAT. I need the correct sales. Which is how much? 5 million, 5,000, 5,800, 5,800. Very less cost of sales. We have the opening stock. Maagizo tumepewa. The opening stock is what? 10% of sales, 10% of correct sales. So 10% of 5,800, right? That is 500 and what? And 8. We add purchases. Purchases are inclusive of VAT. Purchases that we got 2842. So the 2842 times 100 over what? Over 116. which is 450. Then we less what? We less the closing stock. You have the closing stock? Closing stock note number 3. Umetuambia ni 1840. How much is our cost of sales? $11.90. So the gross profit the difference becomes 4610. So hapo ndo pa kuanzia. Hapo ndo pa kuanzia. Tulisema start with the gross profit. If somebody decides to go the long way, anze na sales, so atengeneza the income statement for the 3 months. Well, go there, because inakoroga. Especially hapo mali. I don't know if you remember the incomplete record CFA. Ikitamo sana najua. How you are dealing with the opening stock and the closing stock. Because opening stock can never approve. Clear. Closing stock can also never approve. So ulikuwa unatengeneza hapa opening stocks, you tengeneze mahali cost of sales, don't then work backwards. It's unnecessary. So we play smart. Tengeneza gross profit, pick up a profit, anzia hapo. Sawa. Yeah, anzia hapo. If this one we are finding a certain working in a smart way without missing a mark. Sawa. So have a working, get the GP. Ukimaliza hapo, sasa uanze kuchora kichwa. James Katana and Kaka Limited. So James Katana and Kaka Limited. (2014) taxable income computation. (2014) taxable income computation. So it was converted into a company on 1st October, meaning 9 months as a partnership, 3 months as a company. So it's from so you have the 9 months and you have the 3 months. Then wamesema tuanze na nini? Gross profit. Alright, apportion accordingly. 4610, 9/12. How much? That's 457. So that's 457,500. That's 457,500 for the 3 months. Even 500. Right? Check if you have any other business income. Check if you have any other business income. Hapo kwa income zako, foreign exchange gain, unfortunately it was realized, it was unrealized. Ndio. Kwa hivyo hiyo ni dash. Hakuna assumption ya kumake. Washatuambia. Kama hiyo foreign exchange gain ingekuwa realized, ungeiweka hapo. Because it's also a business income. Capital gain on sale of shares ni kelele. Recovery from insurance on stock stolen, sio ni ya biashara. So we add insurance compensation on stock. Insurance recovery on stock. So for 80,000, 9/12. 360,000. And the difference 120. So goods transferred to branch to haina shida yote iko ndani ya cost of sales already. Dividends from carry or other incomes. Ndio. So tumemaliza. We have the gross income. When you add, you get 3,817,500. That's 817,500. And the other side is 1272. 1272,500. Right? Then we less what? We less allowable expenses. Mwana nibana anaibaji kutenda break sanga. Memona bombali. Yoka kumano unasema tu mwalimu tafadhali twende break. Twende break.
Yes.
You're speaking for me still. So let's have a break. Now let's allowable expenses. Again, just like any other question, you start with additional information. Now, in additional information, note number 1, you've already taken care of it. Conversion from partnership to a company. Note number 2, purchases and sales to share deal nazo. Number 3, closing stock and opening stock to share deal nayo. So note number 4. Now, when you look at the legal expenses in the income statement, does it go up to 680? The legal expenses is 680. So note number 4 is a breakdown of how they arrived at 680 in the income statement. Right? So can we just take the one that is correct? Petition to Association of Manufacturers, it needs an assumption, right? So petition to Association of Manufacturers. Now, an assumption that makes our life easier, successful or unsuccessful? Unsuccessful way. Sababu ikiwa unsuccessful inakuwa disallowable. Na kama ni disallowable sinaweka dash. Because I'm now lessing the allowables. Right? But ukisema successful pia ni sawa. Lakini sasa utailess. Sio kujipea kazi yenye kwa necessary. Kujipea kazi yenye kwa necessary. Next is notice for change of business name unit disallowable. Conveyance fees disallowable. Stamp duty disallowable, negotiating a business loan disallowable, convenience recovery of bad debts,
Specific.
so recovery of bad debts not even specific or general. Hiyo ni kama ku recover debts ambazo zilikuwa zimeenda.
Okay.
Yeah, ni kama cost, debt collection costs. They are fully allowable. How much for 9 months? 33. So 33,750. And the other one for 3 months.
11,250.
11,250. Signing 100-year lease is disallowable still. Purchase of private residence is disallowable. Appeal against tax arrears disallowable. So note number 4 sorted. Note number 5. Repairs and maintenance comprised. Ukiangalia repairs and maintenance for income statement. Is the total 568,400 in the income statement? Yes, it is, right? So how did they arrive at that figure? Note number 5 breaks it down. So purchase of furniture. So can I allow the capital allowance on furniture? Sile iko allowable ni capital allowance yake. So let's get the capital allowance on furniture. 10% of 96. So 9,600 times 9 over 12. $7,200. And for the 3 months, 2,400. Can we have the inside? Still we pay the capital allowance. Inside pia ni 10% still. So 10% of 60, by the way, tunaitoa tu kwa leakage. Kwa leakage yote. So 6,000 times 9 over 12. 45. 45 and 15. Office block designing, bado haijaisha, so it cannot qualify for capital allowance. It will be part of the cost of the office block. So let us know how much the office block costed. Tuongeze hiyo design alafu to claim capital allowance on it. So hiyo for now ni kelele. We have partitions.
Cost of partition.
Let me repeat that point. The designing in itself cannot qualify for any capital allowance, but it can only be quantified and be part of the cost of the office block. Lakini ukiangalia kwa hiyo swali, hatujapewa anything to do with the office block. Ndio. That's why designing of office block hatuwezi weka popote. Designing cannot stand on its own. It can only form part of the cost of certain item. Ndio sababu hatuiguzi popote. Sasa, so partitions, cost of partitioning to 50,000, so is it 10%? Iko kwa leakage yote, other assets. So 25,000, 9 over 12. How much? 18,750, and the difference? 6250. Repainting of business premises, is it allowable? So repainting of premises, even repairs and maintenance. How much for 9 months? 2,400, 9 over 12. 16,800. The difference? Five 600. So now five is sorted. Note number 6. General expenses include registering of patents in disallowable. Floating cost in disallowable. Negotiating cost for an additional piece of land in disallowable. Now, you need to be careful. The total general expenses per unit ngapi? $964,000. Clear. So the 964,000, are they all covered in note number 6 and note number balance? So the balance becomes allowable. We see that? Very few would notice that. But I hope those few you are among them. So therefore, general expenses. You take your working, the total general expenses for the report was 964. So out of 964, toa zile ambazo ni mbaya. Ya kwanza ambayo ni mbaya ni 64. Nyingine ambayo ni mbaya ni 48. Na nyingine ambayo ni mbaya ni ngapi? 56. Your balance inabaki ni ngapi? 796. So a portion here. 597. So 597,000, and for the 3 months. One? 199. That takes care of note number 6. Now, note number 7, interest on loan includes interest on partners' capital over 100, which was shared according to the profit and loss sharing ratio. You have loan interest. The total loan interest per due 166,200. So out of the 166,200, throwing up 100. So 66,200 times 9 over 12. For 9,650. The difference? 16. 16,550. So additional information to Imaliza through the value of expenses. So you have purchases to deal nazo. Purchase of computers. Can we give the capital allowance on computer? Just write the computer. What percent? The 25%. It complicates. So 25% of how much?
180.
45,000, right? 45,000. 9 over 12 and 3 over 12.
$33,750.
Sorry for that. So for 9 months, you have how much? 33,750. And the difference? 11,250. Partner salaries ni kelele. Legal fees tushadili nazo, sindio? Note number 4, repairs and maintenance. Note number 5, Thank you. Rent and rates. Allowable, ndio. Tumedeal nayo popote kweli? Weka hiyo rent and rates. Even the partnership pays rent and rates, ndio. So rent and rates, how much is it the total? 244, 600, 9 over 12, and 3 over 12. 183, 450, and the difference is what? 61, 150. Take care of that. Interest on loan tumedili nayo, si ndio? Tumedili na general expenses tumedili nazo. Motor vehicle expenses allowable, si ndio? So apportion accordingly. Right? So motor vehicle expenses 840,000, 9 over 12, 630,000, and the difference is 210. 630 and 210. Ole mwenye vidole zimetoka kwenye calc. Insurance. Hatujaweka popote, sio? So it is allowable question accordingly. So 156,000, 9 over 12. 117. So 117,000 na ingine ni ngapi? 39k. 39,000. Preliminary expenses disallowable, clear. Director's fees for only 3 months, clear. So director's fees weka saidi ya 3 months as an expense that is allowable. That is an amount of how much? So 600k to the side of 3 months only. Audit fees. Let me repeat the for 1 hour. Utamaliza. Mungu na watu wake. So audit fees, is it allowable? Na tujaguza popote, si ndio? So audit fees 148, 209 over 12. 111, 150. So 111, 150, and the balance? 37 to 50. 050. 37, 050. Debenture interest is allowable, sindio? Port of traveling expenses? No. Allowable. Hatujaguza popote, sindio? So traveling apportion accordingly, 96,000, 9 over 12. So the first one is 72,000. 72 and 24. Great. That's tumemaliza 14 marks. So get those expenses. So that we have taxable business income. Ile unapata total unaleta, will not dispute. You're 9 months or 3 months? 168. 57. 57. Tumesema tuta dispute. Unless mwenye ako very sure na answer yake aseme. 168507. Unaona mwenye akoshua ameleta yake. Analeta tuandike. How much? 1875. 1,070. 1875,000. One? 122,500. 122,500. You have another one, Miriam? On it. Sawa. How much? Ya, yang di syntax error. Basically, para sama bisa pandikan. Work in progress. The confirm. Hi. Audited. Thank you. So the business income. So come on, sharp audit, let's just do the 12,72500 minus answer. We get how much? 47,500. Present. Sama kit. What's up? The second one. 3 months. This one. They have audited it at 12,25,000. And yours is? I hope you don't add much. Add zako, sindio? Kwa zangu mimi sikuandika zote. 1056. I will confirm the confirm. The confirm kama tulia. This one is how much for the 9 month business income? 18, 19, 42, 500. We bring in other incomes. Not about Nanyoroshma. So partnership, no, right? So partnership funga. Lakini companies other incomes zinakuja hapo chini. So other incomes, and so there were some dividends. There are some dividends from Calico. So dividends from Calico. Mchezo ndanganyana. Kama bora ukali. So the dividends from Cali Cooperative Society for 3 months is how much? It's 1,003 over 12. 12,750. So we have our total taxable income. Which is 60 to 50. Just like 60 to 50.
Yes.
So give you 14 months. Right. Now, part two is being asked, part B, comment on the tax position of James Katana and the company. What are the tax position of James Katana and the company? So let's get the formats together. Just comment by saying this. I know you're tired. So you say James and Katana. James and Katana will be taxed. James and Katana will be taxed on income from the partnership. James and Katana will be taxed on income from the partnership. Together with their other incomes, based on their profit and loss sharing ratio. Angalia tena based on their profit and loss sharing ratio. And they will enjoy personal relief. And they will enjoy personal relief. The next point. See, James and Katana and individuals. So individuals who are Kenyan residents enjoy the personal relief. Yeah. The next to say Kaka Limited will be taxed on its income. Kaka Limited will be taxed on its income at the corporation rate. Kaka Limited will be taxed on its income at the corporation rate of 30%, at the corporation rate of 30%, and no personal relief will be granted. And no personal relief will be granted. Number 6 asking about citing examples, advise James and Katana on 2 areas of tax avoidance that they would explore for the business. So tax avoidance measures, and just highlight them. It's something that we shall talk about. It's under tax planning. But there is tax avoidance. Tax avoidance is purchasing assets. Not purchasing assets so that you cannot pay tax. So instead of purchasing your lease. Reducing your tax liability legally or illegally. Hiyo jina legally lazima iambie. Ndio. Because tax evasion is illegal, right? Tax avoidance is legal, right? So reducing your tax liability by taking advantage of the loopholes in the act without breaking the law. Yeah. So what can James and Katana do? Ili wasivunje sheria lakini wajipunguzie taxes. Kitu cha kwanza chenye wanafaa wafanye walifanya. Wakatoka kwa partnership wakaenda kwa kampuni. That is tax avoidance measure. That's why we say Kaka Limited italipa taxes zake. So James and Katana have no responsibility on taxes of Kaka Limited, but they have responsibility on taxes of the partnership. So yeah, so that is already one of the answers. So already point moja iko ndani ya swali. Sasa, so starting up a company instead of a sole trader or partnership. Starting up a company instead of a sole trader or partnership. Ingine, just highlight, shall explain at the right time. Purchase of assets, purchase of fixed assets. Purchase of fixed assets instead of leasing. So buy these assets instead of leasing. So how is that a tax avoidance measure? Zile capital allowances una claim ziko kubwa kuliko zile lease charges. Sindio? Yeah. So you can just explain by making that statement. Capital allowances claimed. Capital allowances claimed are always higher than, are always more than, are always more mingi, are always more than the lease charges, the lease rentals that would be paid. Are always more than the lease rentals that would be paid. They can donate to charitable institutions. Donations to charitable institutions. You know, donation if allowable, please help me some time back. Yeah. So you can just say such donation is allowable expense. Such donation is allowable expense. So you have many ways that individuals can explore to avoid tax. They have many ways. They can even contribute to a registered pension scheme. Yeah. When they contribute to registered pension scheme, up to 40,000 ya kila mwaka, itakuwa allowable expense. We'll talk about them. We'll talk about them. We'll talk about them. Now, let me just take, I think 15 minutes maximum to talk about them. No, sorry. 15 minutes maximum. Write for me incomplete records. Let's just set the best for next week's class. Small subtopic. It's part of partnership. But then that incomplete records, students will give one a partnership. Students will give a partnership. It's one key area that is most tested. So incomplete records. So you say it is applied under tax investigation. It is applied under tax investigation where the taxpayer does not maintain, proper books of accounts. Where the taxpayer does not maintain proper books of accounts. It has a summary, of assets and liabilities. And the bank statement. Stroke cash book summary. And the bank statement, stroke cash book summary. Next point. It involves preparation of two key accounts. It involves preparation of two key accounts. By the way, Mama, incomplete records. From the name itself, the information is incomplete. Now, this one really happens with the small taxpayers. Our traders wadogo ambao hawezi hire accountant. And we know they exist. Kama wale wanatuuzia maziwa mtaani, people like those ones, right? When you go to those shops, then you ask for the income statement. They don't even know what it is. Sindio? Lakini ukiwauliza madeni yenu ni gani? Wako nako wameandika kwa kitabu. Sindio? Hawa ndio creditors wangu, mmoja ni wakula wako hapo. Na hawa ndio debtors wangu. Sindio? Alafu tunakuwauliza na assets zenu na liabilities pia wameziandika mahali. Right? So the information that they have is incomplete. Now, don't forget, sisi ni KRA. Sasa, anytime you're talking tax, you are not the taxpayer, you are the taxman. Now, sisi kama KRA, tunaangalia watu tunasema kwa biashara. We must find a way in which we shall get some incomes for them to pay tax on. So how do we do that? By trying to put all this information that is incomplete into something that makes some sense in the eyes of the tax. So how do we start that? We have the two key accounts that we must prepare. And the account number one is the debtors control account. So i.e. number one, debtors control account. Debtors control account. Then you say, it helps to determine amount of credit sales. It helps to determine amount of credit sales. So just show your account, debtors control account. So this one is an asset account. Asset account opening balance in debit, right? So you have the opening balance brought down. And of course, the closing balance in the balance carried down. Now our debtors will be reduced by what? Receipts. So receipts zinapunguza debtors wetu. Wakitulipa tuna receive. Right? Then also be reduced by what? Then discount allowed or received. We receive from suppliers and we allow customers. We allow to customers. So say we customer account. So ni discount allowed. Right? So discount allowed inapunguza debtors yetu. Discount allowed. Return inwards ama return outwards? No. Return inwards. Tulikuwa tumetoa kwa kuuza tunarudisha ndani, si ndio? So return inwards inapunguza debtors wetu. What of carriage outwards? Carriage outwards doesn't appear anywhere here. You're operating expense. So delivery costs doesn't appear here. Bad debts. So bad debts written off. Right? What of the provision for bad debts? Provisions don't appear anywhere in the debtors control account. So there must be bad debts written off, whether general or specific. Zote ziko hapa. Sasa ukienda kwa income statement pale chini utaangalia specific walao. Lakini hapa kwa control account, all bad debts that were written off will affect our debtors, whether they are general or specific. Sasa, haya, debit notes, received or issued. Tumesema tu zaidi. And we receive from? So received should not appear here. Still. It should always be about what? Issued. Right? So debit notes issued inaongeza debtors ama inapunguza? Debit notes inaongeza. So it makes correct and accurate. So it should increase. So we have debit notes issued. And of course, ni nini itapunguza? Credit notes issued. Credit notes issued. We have this format checks. With debit or credit?
Debit.
So with debit or with credit? Sinamaanisha tulikuwa tumeziweka kwa bank, lakini bank imereject. Kwa hivyo tunapunguza ile amount tulikuwa tupeleka kwa bank kwa kuleta huku. Ndio. So discounted checks tunakuja huku. Kama jina discounted inaleta shida, unaweza sema rejected checks. So hona kitaandikwa. Kwa correct. Then of course the balancing figure becomes what? Credit sales. So this one is the balancing figure. In preparing this account, this is what we are looking for. So credit sales is our balancing figure, and we appreciate for total sales equals to what? Cash plus credit sales. The total sales is the cash sales plus credit sales. The number 2, creditors control account. Creditors control account. Creditors control account, you say it is used to determine amount of credit purchases. It is used to determine amount of credit purchases. So let's prepare the account. So creditors, I believe we all appreciate for liabilities. Count liabilities. So opening balance, credit side, nil. So balance broke down, and we have the balance carried down. So what reduces our creditors? When we pay, nil. When we pay, we credit the bank, we debit the respective account, nil. So hapa tuko na payments. Discount received. Zinapunguza creditors. Discount received. Namba michapa yake yote. So discount received inapunguza creditors wetu. Return outwards. So return outwards, right? Credit notes received. Anything received. Ni a supplier. Suppliers no creditors. Ndio. So you have credit notes received. Alafu of course debit notes received. Zinaziongeza. So huku tuko na debit notes received. Debit notes received. Ni hizo tu. Generally ni hizo. Then the balancing figure becomes what? Credit. Credit purchases. We have to appreciate for again, total purchases equals to cash plus credit purchases. So total purchases equals cash plus credit purchases. Cash plus credit purchases. Then baada ya kufanya hizo story zote, niandikie tu number 3 for cost of sales equals to obvious kwenye tunajua sasa opening stock plus purchases minus what? The closing stock. So opening stock plus purchases minus the closing stock. Kama opening stock iko understated,